Good morning, guys. Good morning from cold Europe right now. So, yesterday's trade is currently in the green. We shorted at 250, 250 and then a little more at 500. The plan was potentially to stop limit close. Well, let's just take another tab to show you in the smaller time frames what our plan was. Um, so we're going to go to 4-hour time frame here. And we were looking here, I really like sometimes just getting rid of all the indicators and looking at pure price action, because it really kind of lets you focus in on what the most important thing is, what the market is telling you that it's doing, not just what indicators are telling you that the market is doing. This is really the core of trading, is looking at just candlesticks. I love the candlesticks. I read a little bit about how they were first created and all the interesting Japanese names which they had for them. And it's quite interesting if you're a nerd like me. So we shorted some at the 4,250 level because that was kind of the previous top over there. And then I was looking for a double top of the 4-hour, which we basically did have, which is pretty sweet. I figured that things were getting, overextended. So we had a 4-hour high over here, and then we had another 4-hour high, sort of not quite oversold, but for the bear market, I just figured it was unlikely that we would break not only this resistance at 4,250, but also this resistance at 4,500, and that's why I decided to enter the short. So before we decide whether or not we take profit on this short, let's look at what I like to always start doing is looking at the longer time frames. So the weekly, I just noticed something interesting. Obviously it's still bearish as hell, and this doji candle is forming now. It's really a pure indecision doji. There's nothing bullish about this. The only bullish thing is that it's not horribly bearish. All right. So we had these bam, bam, like weeks and weeks and weeks of declining volume, and then an explosion of volume over here. So this is, clearly bearish as hell, and not bearish in the sense that like we just tanked down to 3,000, in 2 days, which would be ridiculous, and then we would expect a fairly good chance of going up to like 4,500, 5,000, like pretty much immediately, but. Because when the markets are just highly irrational in one direction, as we can see very clearly from this uptrend, you tend to get these huge spikes going back. Okay, the same thing happened when we came up here. We came up huge, like just came straight. Look at this percentage. In 1 week, we came down. Well, we closed 30%. But if we go from basically the open of this candle to the close, that's 43%, all right? That's absurd, So of course, after we've come down 43%, we can expect, and especially of course because the markets were so bullish then. It was hard to expect us not to have. And then look at this, 60% coming back up. So those are the kind of wild swings that we can expect, but. In this case, I wasn't expecting that because, okay, so we broke the 6,000. Everyone was waiting for this level, okay, for many weeks. So once it broke, most traders were trying to get entries around the 4,400 mark or the 5,000 mark even. The 5,000 was perfectly reasonable. It was a high over here. It bounced off a little bit over here. A psychological number, but we broke through that. All right, fair enough to the bears. But then the bears sort of stopped over here at 3,600. They didn't go right down to 3,000. So that's why I'm not expecting us to have a V-shaped recovery yet, especially with the price action that we've seen over the past day or two. So let's now go to, actually, before we go to lower time frames here, have a look at this. So the MAC, as you may know, bullish divergence is when we have lower lows on the price. Okay, these are lower lows. over here, and higher highs on the RSI, which of course we have absolutely none of whatsoever here. But what we do have is a first indication of a divergence is the MACD. So the MACD has high here, lower high, and lower high. So let's look at where they correspond with the prices. This peak is over here, all right, 6.8. This peak is over here, 6.1, all right. So we have a lower low on the price from 6.8 to 6.1K with a higher high over here on the MACD. Now let's look at the next peak, and that's right here, okay? 6.1 down to 4K. So if you think about like the magnitude of that change, so 6.1K to 4K, that is, just go to the close of the previous weekly candle. That's a 35%, jump. But the MACD is not corresponding. It's not saying, hey, you know what, this makes sense. It's basically showing that the strength of the bears is not what it used to be. They have strength, but it's not quite the power they need to be at this current price. That being said, markets are irrational, and I'm not looking at this as like, oh wow, this is a huge bullish sign. I would be saying that if the RSI was doing the same thing. That's what I like to call the trifecta, where you have MACD, RSI, and price all telling you that there's divergence. Right now it's just MACD. Okay, so in other words, it's something interesting to look out for. And also what's interesting to look out for is this. If this weekly point over here, if it stays above this level, the previous weekly peak, then that will be fairly bullish in the sense that the bullish divergence on the MACD is still there. If we cross this, so if this comes right down through this, it's going to be pretty insane. We'll be at a very low price point then, and of course it'll be fairly bearish. Anyway, let's go down to some lower time frames now. So on the daily, we were noting this point of resistance over here, and unfortunately we got shorts in there. Another short. So what are we seeing here? Well, we're seeing that the crossover. Well, the crossover isn't about to happen. There's still, it's still a little bit away from there, but certainly we're ticking back, and the market sentiment has changed on the daily, and it's entirely possible for the bulls that we have from this low to this high fib retracement. So we're right now at the 6.1 to 6.65 level. Now, I'm a big fan of Adam Grimes, who basically says that Fibonacci is a waste of time. He does use it very occasionally, but he says that there's no proof basically that the 6.5, that the golden ratio zone over here, where it usually corrects to, is actually going to be a profitable place to buy. I don't know for sure about that. I haven't looked into all the statistics, but what I do know is that if a lot of people are looking at that level, and especially if there's many bots which are using Elliott wave as well as fib retracement levels, then it's going to be a significant level. And as you can see here, this is the most typical level where the bulls, the technical, the Elliott technicians and the Fibonacci believers would be buying, right? So 3961, and right now, I mean, it's looking like that could be the low of this small, let's say, this small move, okay? Not the low of the year, but in the terms of the bulls might be saying, okay, well, we had this high, we've corrected from this low, and now we're hoping to target a new higher high, right? So it makes it interesting. It's still a bear market, right? There's still no way of saying that. It's still hard to say, well, this is going to be a reversal. But let's have a look now at the 13 and the 21 EMA. So these have been, again, many traders, they will look at one thing, like Adam Grimes, he looks at pullbacks. Actually, I haven't read his book, to be honest, so I don't know exactly how he enters in his positions on the pullbacks. But for example, Filicone likes to look at Elliott waves, and the chart guys like to look at higher lows, higher highs, and the EMAs. And I'm not religious about any one strategy. I like to look at a variety of factors to find as much confluence as possible, and also look at use tools which most traders, or let's say which a lot of traders are using. In any case, the 13 and the 21 EMA were, and in general in downtrends, are quite reliable points for the bears to enter. So, and this is made clear by the previous, okay, we have a high there, a high here, okay, and we reject. And here we broke through, all right? So the bulls were, pretty excited. We broke through with volume. We came back down to test. We didn't even touch. We broke up again, and then we grinded on it, and then we crashed through it. And now, unfortunately, of course, we are back to below it, which is very bearish. And again, in theory, it's a good point for the bears to enter, all right? So what are we seeing on the smaller time frames? Well, again, let's just, before we go to the smaller time frames, let's stick to this time frame. So we entered our short here on the 4-hour time frame for this high, and we entered some more on this high. Now we have an average entry price of it must be about 4,325 or so, and we're going to look at the profit percentage that we've made from that so far. All right, so we've made pretty solid 6.5% on our $50 in our portfolio. So the thing about the bears is that from the 4-hour time frame, one might say, okay, well, this is a fairly solid time to take profit. We're at the 4,000 level. We're resisting quite clearly here with these lower wicks, just pushing us right back up there. All right. I mean, let's look at this price action of just these candles, because I find it interesting to tell the story of what's happening here. All right. So we have the bears are absolutely fully in control with massive volume over here, and no lower wick, or basically no lower wick. So the whole candle, pretty much like 90% of the candle, is just the bears pushing us down. Here we have a classic indecision doji candle. All right, so long wick on each side. Also pretty solid volume, showing that the market is looking for consolidation and then potentially another move later on. The next candle is extremely bearish. So it's the bulls pushing it up, but the bears pushing it right back down, in addition to a little bit further down for the candle to turn red. But here the bulls are pushing right back up again, saying, hey, you know what, bears, you've been here for too long. We still got a lot of energy left, a lot of momentum. They push it right back up. Now we have another sort of indecision doji where the high of this does actually cross the high of the previous candle, which is a little bit bullish, but just a tiny bit. All right, and then after that bearish indecision candle, and of course the volume is dwindling now, so the market is showing uncertainty in the market, and people are not terribly interested in this price point. The bears try to push it down again, but the bulls yet again, look at these 3 long wicks down here. All right, this is the bulls saying, no, bears, you're not crossing this level. We're going to push it right back up. So they're defending the 3,960 level pretty impressively right now, and yeah, that's the story. So it looks kind of bullish in the sense that I expect this a good chance for a little move up at the very least. But considering that we're in a bear market, certainly entering a bullish position here is a risky proposition. And is this a bear flag? It's not the typical shape of a bear flag. A bear flag is either going to be in the form of a pennant or of a flag, right? So if we just show that in terms of demonstration here. And again, guys, I'm not an expert on crypto, right? I've been learning it for like 6 or 7 months, so there's a good chance that I'll say something which isn't entirely accurate. And if I do, please call me out on it, especially if it's objectively accurate, so like for a fact that it's wrong. But I have a pretty sort of wide knowledge of just general technical tools and principles, but I'm not sort of like highly specialized in any of them. So in any case, so the pennant looks like this pretty much. Let's kind of bring it out so we can see. Right, so we have a touch over here, over there, over there. So actually, this is kind of forming a pennant. I didn't realize that before for some reason. So that is, a bearish continuation whereby, we break out of that and we come down. That being said, we only have 2 touches over here, and we have 1, almost 2, and now a 3rd touch over there. So yeah, it's fairly possible that this could continue, and then that we, break out of this bearish over there. But what I always like to look at is what are different potential scenarios that could happen. So yes, let's just keep that there for now. Yes, we could break out bearish from there, but what could also happen is that we end up forming more of a flag. So we keep this this trend line over here, and then we form a flag formation, something a bit more like this, all right? So maybe we touch over here, we touch over here, we touch over here. It's possible that we break through this. That doesn't mean it's bullish by no means. We could go up there, touch down here, and then maybe even go back up again to touch like the 4,200 and then come down. That would be a pretty long bear flag, to be honest. Usually the bear flag is not going to last that much longer. It's going to break out, within this area. So if you were bearish, you could certainly make an argument for entering here, since this is the top of this pennant. For a bullish entry, for a bearish entry. But overall, I'm looking at the charts now. What am I seeing on the 4-hour? Yes, we have these wicks pushing back from here, but I think that's and yes, okay, we've hit the 618. Those are certainly the 2 biggest counter arguments to holding this position. But at least I'm gonna have to think about this a little bit longer. But right now, I feel like closing any of this short is not the best idea, because even if the bulls do push back, well, first of all, they're going to have to test this this level over here. So the 4,200 level, where we topped out over here, we bottomed out several times there. So that's going to be a significant level. And then when we cross that, this is going to be a significant level. Okay, we had these 2 tops over here, and then okay, if we cross that, then the next level to be looking out for is pretty much 5,000. And if that happens, and certainly if we're seeing anything like we saw yesterday with the double top here over the 4 hours, and the RSI actually ticking, well, pretty much double topping, but ticking down a little. If we see anything like that, we're going to be adding a lot to our short. See, the problem is if we close some of the short now and it keeps on going down, what are we missing out on, right? So if we break down from here, let's say even if we come down to 3.8, first of all, we've already broken the golden ratio if we do that, all right? If we do that, not only have we broken the golden ratio, the 4-hour, which came down and is now struggling to break through these EMAs, is going to show a very clear resistance from these EMAs, again, making it very more bearish. So if we come down to 3.8, it's already going to be harder for the bulls to realistically push up from there. And then the next logical level really will be the 3.6. And so, I mean, if we just look at that, let's just do a short position from here. So if we short here, right, and we have this as the target, because we're assuming that if we break this level, that we're actually probably going to just come down to the next point of resistance. All right, so that's the potential profit that we're looking for, a pretty reasonable profit level. Let's just make it a little bit more reasonable, okay, just a little bit higher than these lows. And the resistances, I mean, there's several resistances, right? I mean, trading is always a bit of an art as well as a science, so you have to use your intuition. But, one resistance is here at 4,250, another even stronger resistance is here at 4.5. So, and then of course the next resistance would be 5K. But if we just look at those two, I would say, take an average of this for the stop loss potentially. So we still have 1.5 risk reward ratio. In other words, I would say that in the short term, the bears are still favored, even if we break out of this, our position will still be in profit because our average is about 4,325 or so. And not only that, guys, but if we get down here and we may take some profit, but let's see what happens if we break 3.6. All right, if we break 3.6, like, do you really think that we're gonna just bounce off of like 3.450, 3.5? Like, sure, we could, but it's pretty unlikely, and everyone is looking down towards the 3,000 level. If you look on a larger time frame, you'll see that this is a very significant level. And then look at the profit percentage from that. That's 25%. All right. So in the extreme scenario, in the longer term scenario, let's say longer and more extreme term, we have a 25% target potentially. And if we go to the other side of the extreme, we have a target. So I mean, in other words, if we cross 5,000, then yeah, that would be pretty interesting for the bulls. So right now it's still slightly favoring the bears, right? So the extreme scenario slightly favors the bears here. The short-term scenario slightly favors the bears even more, actually. And so, in other words, I don't think it makes sense to take any profit here, because and if we go up, as I say, we can just add more to the short. That's all right. We're in a bear market. The trend is your friend, all right. And now this video is being really long. I'm gonna close it down now. But the summary is, we're happy in our short position. We got in at a fairly decent price, pretty small amount, so we can still add on more to it if we go up. And hope you enjoyed the video and it wasn't too long and too boring. All right, see you guys.